Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Shares of the online recruitment company Upwork surged 5.5%. This after it provided guidance for fiscal years 2026 and 2028 at its 2025 Investor Day. The company said it will now achieve long-term targets of 7 to 9% compound annual growth rate. This of gross services volume. It's the acronym GSV. What it essentially means is it's the total value of all transactions that occur on the Upwork platform. The company also said it'll see revenue growth of 13 to 15% and 20% adjusted EBITDA compound annual growth rate through 2028. This comes after shares surged 13% earlier this month after it reported third quarter results that beat expectations and raised its full year forecast.
Delighted to have with us right here in our Bloomberg Interactive Broker studio, Erica Gessert. She is the CFO, Chief Financial Officer of Upwork. Busy day for you.
Very busy. Yeah, busy but great. A lot of exciting stuff going on.
Well, investors like what they heard from you guys in terms of guidance. Talk to us about the outlook, what you're seeing, how much confidence you feel in the outlook, and what it kind of tells us about U.S. economy and kind of the workforce.
You know, we have, our Investor Day was really timed perfectly for us. The reason our stock went up 13% after our earnings report was we, at the end of 2024, we told our investors that we would, take a year and really reinvest in our company and rebuild Upwork. And we said that we would return to GSV and revenue growth in 2026. Well, we did that 2 quarters early in Q3 of 2025. We reported GSV growth of 2%. We reported revenue growth of 4%. And what we told them then was that our results are going up and to the right now. And that is because of really 3 investment areas. One is AI, one is SMB, expanding our relationships with SMB, and one is the outsized opportunity that we have with large enterprise. But, with that, AI is really one of the big stories for us because I don't know how well you follow Upwork, but, we have had a bit of an overhang over our stock on the opposite side of the spectrum, thinking that we were going to be hurt by AI, whereas we are truly a beneficiary of AI. We now see about annualized volume of $300 million in GSV from the AI category on our platform, and that is accelerating. In Q3, it was over 50% growth per year.
So I want to remind everybody, Upwork is a hiring platform. You can go there to find talent in development and IT, AI services, design and creative, sales and marketing, admin and customer support. It's this 2-sided market. So
that's right.
You have a good view on what exactly the type of job that companies are hiring for, and then also the availability of that labor. What does that picture and that balance look like right now?
Yeah, the last few years have been, as we all know, tough on the job market. And, most companies in our industry were down double digits over the past few years in terms of both volume and revenue. Upwork was relatively flat for the past couple of years. So we were gaining share against staffing companies, even other online marketplaces, but still relatively flat. And it's really these investments that we've made in AI. We're actually seeing both the AI category itself increase, and that is really, like I say, accelerating. So this is AI work on the platform, but also the investments on the front end. So if you think about the hiring process and how that works, there's a lot of friction to it, right? A client comes onto our website, they post a job, they have to write it up, they have to search for talent, the talent has to write a job proposal. Well, now AI does all of that for both our clients and our talent, and it's making them find each other faster and kind of fulfill these jobs and get them done quicker.
Those matches work? Like what percentage of the time? Or where is it that it's like, well, not good?
Well, no. So what the AI is doing is it's writing the job post, it's writing the job proposal, and of course that there can be editing.
Yeah.
But now we do have AI interviewer, and we also one of our most successful very recent launches is Uma, which is our AI companion on our site. Is now recruiting talent. So the client asks for a certain type of talent. Uma goes out within our 18 million strong talent base and identifies the right talent for that job. Now we're seeing fill rates much higher using the AI recruiter than with a human recruiter.
Why?
Well, I think we have one of the best data sets, honestly, on the planet. And if you think about what this AI is actually really good at, it's good at spinning lots and lots of data, right? And so, we've been building, our platform is over 10 years old, and we've been building this data set of, what types of jobs match with which talent, whether client is price sensitive or, maybe they're quality sensitive. And so the recruiter, the AI recruiter, is much better at scanning across all of this data than a human can be.
Are you seeing demand stay stable, decrease, or increase from the side of your platform that is looking for the workers?
Yeah, so client demand. And I think, what we are seeing is client demand has been where we have seen the biggest impact from I would say the job market and the economy writ large.
Meaning like if the economy's softer, then demand will go down from the client side.
Yes. And if you think about that, our online marketplace is primarily SMB customers, right? And so
small and medium-sized business.
So if you think about what's going on there, when inflation is high, this hits consumer wallets. It also hits SMB, leaders, and then also when interest rates are high, they have lower access to capital, right? And so we do see the demand environment in terms of just pure volume of SMB hirers, relatively flat in this right now. But what we are seeing is, we are one of the few places where these SMB customers can actually access a very high quality AI talent and afford, in an affordable way and quickly. And so as they're trying to implement AI work within their businesses, this contingent marketplace that we offer is one of the best places they can find.
What's your take on AI and the impact it's going to have on the labor force?
So, we have amazing data on this, and what we are seeing is that AI is not going to replace humans. What's going to, humans with AI will replace humans without AI, right? And so we're seeing AI replace very simple tasks, but not, the larger, more complex work, because these AI agents are not that agentic, right? They have no judgment. They cannot complete the complex tasks. So what we've seen over the years is, jobs that are $300 and lower, those have gone down on our platform. So about 2 years ago, we had about 5% of our work was job $300 and lower. Now it's about 3.5%. But at the same time, the AI jobs on our platform, clients who engage in AI work spend about 3 times what our normal, kind of platform work does. And so, we see that growing and growing because that work is more complex. It requires humans and humans using AI agents, but it requires humans in the loop.